Hi there, this is Mark Espy with MarketTamer.com. I am also known as the Robinhood Trader. And before we begin, I must remind everyone that all that we speak about today is for educational purposes only, never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. We had a holiday shortened week this week with a 3-day Independence Day weekend. We began trading on Tuesday and we opened up with a spinning top type of a pattern, and it comes off of the last 2 days last week, which I had mentioned to you. A tweezer bottom began on Thursday with a hammer type of a pattern. It was followed up on Friday with a spinning top type of a pattern. Both of those had wicks to the downside, which formed a tweezer bottom rejecting lower price levels. And I had mentioned that last week that I felt it was a distinct possibility that we would move up, which is exactly what we did. Although the beginning of trading on Tuesday was not really convincing, but it was a move back up, bullish day after many very bearish days. So it was an indication that, in fact, we may move up. And then we followed it up on Wednesday with a very big up day, Thursday follow-through day, and then a smaller range trading day today, Friday, closing out the week. Interesting to note that the volume on all of this has been decreasing as indicated here. So the market participation in terms of driving this higher seems to be waning quite a bit actually. We also had a crossover, and I indicated to you last week that I was looking very closely at this, a crossover, the 50 simple moving average over the 200 simple moving average. This is a very closely watched occurrence. It doesn't happen that often, and when it does, you really need to pay attention to it. Most of the institutions, I'm sure, are well aware of the fact that this crossover occurred, which bears for a bearish action going forward. So as I look at this, I see the narrowing of the trading range, and it's on much decreased volume. We have a crossover of the 50 over the 200. I feel that we're going to probably begin to lose steam on the up move sideways, and then come back down once again to retest some of these lows. The low right here at the tweezer bottom was at 96.14. We also, though, have a low here which actually had a triple or close to a triple bottom, which was around 98, just about 9,800. So we need to respect that as well. If we break below these areas here, then there is support at 9,500. There's quite a bit of confluence there and some market symmetry there. There's also a swing high. There's two of them from January and June between 8,800 and 9,000, and a swing low from July at about 8,000. Then we have the March 09 low at about 6,500. If we continue up, we need to contend with breaking through both of these moving averages, and then the target areas that we would be looking at would be first this shelf that occurred back here in late February, and also a swing high here which was around 10,300. We have this swing high here at around 10,600, here at 10,900, and the April 26th high about 11,200 and change. We also have this swing high from back here in January, which was put in about 10,750. So those are the areas and the targets that you want to be looking for should it move to the upside. But my thesis is we had a reaction bullish move up here, sort of a relief rally, so to speak. I think it is running out of gas. I think we're going to begin to languish sideways and move back down. Under any circumstance, I think it's going to be quite difficult to move back up through these moving averages right here. And looking at the crossover, I think is quite significant. So look for it to begin to move sideways and then to come back down to test some of these areas down here. The stochastics is still showing bearish movement. Bullish movement to the upside. We had a crossover down here, as I indicated last week. Felt that we would get a crossover and a move back up. So it's continuing to move up toward the 80 band of the stochastics, and we're looking for it to possibly roll over. There is some momentum to the bullish side, as indicated by the histogram here, ever so slightly. We just got to cross over the MACD line over the signal line, but I think it's going to run out of gas, as I mentioned before, and begin to flatten and or come back down. Okay, with that, we're going to move over and take a look at the SPX.